All right, so yesterday I went and attended my first and official live event for cryptocurrency. I am actually super excited to make this video for you guys because I learned a ton of great information that I feel like is, definitely gonna save me a lot of money in the future, save me a lot of mistakes and a lot of headaches. Obviously the best way to learn about anything new is to learn straight from the experts. There was people who have done multiple ICOs, people who are heavily involved in the crypto space, and some even millionaires, and I think there might even have been a billionaire or whatnot. But let's get right into it. All right, so the first thing that I learned from the event is that most importantly, you need to never ever follow the hype. Okay, let me phrase that differently. You should never ever follow the hype, because the hype is where emotional decisions are being made. And in this space right here, you need to make absolutely 100% logical decisions. So here's what I mean, right? When it comes to making investments, or at least the majority of people make investments based on their emotions, right? So, let's kind of backtrack a couple months or a couple of weeks ago. When people saw Bitcoin going up and up and up, they were swearing that it was gonna go all the way up to the moon. So what do? Because they're greedy and they hate missing out, right? They're fearful of missing out on capital or potential gains. So what they do is they jump right into it, right? So they're like, hey, I'm gonna put my life investments, which is gonna lead to my second tip for you guys, or the second thing that I learned that was real valuable, is how to kind of control your portfolio. And how much of your money needs to be invested in this market, right? In the cryptocurrency space. Let's stick to the first point, right? So most people make emotional investments, and that is the worst kind of investment, because what happens is, and especially if you make the mistake of investing everything you have, as soon as you see something going up, you're gonna put all your money into it, right? Because you swear that it's gonna go up and up and up and up forever. But as soon as it starts dipping down, for example, like it has for, the past couple of weeks, I would say the past month, right? It's dropped significantly by about like 50% or so. This morning I woke up, it was at 900. I actually bought my first Bitcoins today. Not really. I mean, if you guys follow me on my Instagram, I bought into Bitcoin about early 2015. Oh yeah, I put up a video of it earlier, right? The $450 of Bitcoin that I bought in 2015 could have been 25 grand today. But of course, right, I made an emotional decision and I sold all of them right away. But besides the point, to stick to the point that I was trying to get at, is when you invest everything you have into an emotional decision, what happens is as soon as it starts to go down, you think that it's gonna go down to zero. So you pull all your money out and you lost that good chunk of money. As opposed to if you made a logical decision. And how do you make logical decisions? Well, one, you gotta do your research on the company and on the coin that you're investing in, because truth be told, that there is only, at least this is what the pro said, there is only about 8 to 10 really valuable coins that actually have a purpose, that actually solve a problem. The second thing is you have to understand, or you have to be familiar with the team that is behind that coin, because the success of a potential coin or a company all depends on the team that's running it. And unfortunately, if it's a bunch of scammers like it was for BitConnect, it's gonna go sour really, really bad and really, really quickly. So you have to be able to believe in the team that's managing and you're investing into, pretty much, right? So, because when you're investing into a company or a coin or whatever it is, you're investing into the people that are running that specific operation. So make sure that whoever you're investing into is worth the investment. Okay, so that's one, right? The second thing is, how should you break up your portfolio? First of all, you should only be investing 20% of your disposable income or your savings into the market. And here's the reason why. Because if you're investing in the market to get rich, it's gonna be very, very tough for you to do so, right? But if you're investing in the market to hold the specific investments you're making because you actually and you genuinely, believe in that project and the problem that that company is trying to solve, you will get the returns in the long run. All right. Now, you can do investments two different type of ways, right? You can do day trade, or you can actually just invest for the long term. Most of these crypto millionaires and experts recommend that you make investments for the long term. And the reason why is because the stage that the cryptocurrency space is at its infancy. Some people are saying it might be too late, and they were saying that it's actually it might be too early, okay? Too early. If we look at the stock market back in the dot-com bubble, it literally went up and then it crashed down, right? Crashed down and then it shot up again because it was proven that the world needed the internet. It was meant to be, so therefore it went right back to where it should be. So the crash that we're seeing right now is to kind of regulate, right, the hype and the emotional buying and the greed that's going on in the market. And then it will go ahead and, you know, settle itself back in the next couple of weeks, hopefully, right? The way that they said you should break up your portfolio is 40% of that 20% of your disposable income should go towards Bitcoin, because it's kind of like you're investing in gold. It's like a solid investment, you know, pretty much even out the risk of your portfolio. The other 40% should go into Ethereum, and then the 20% should be into different altcoins and smaller coins that, you know, you believe will become, you know, big in the near future, right? Again, you got to do the research on that 20%. That is how you should break it up. 40% to Bitcoin, 40% into Ethereum, and 20% into whatever altcoin you should, you know, you're excited about or you believe in the most. By the way, guys, this is by no means financial advice. This is what they shared, and they said the same thing. That is not financial advice. It's just how you should go about it to kind of, you know, balance off the risk of your portfolio. So you're not putting all your eggs into one basket and, you know, doing complete emotional buys. You're actually making smart decisions and a smart portfolio. So the last thing that I want to, you know, share with you guys is this whole idea of ICOs. So ICOs is another, or it's the cryptocurrency way of taking a coin public or a company public, as opposed to, like, you know, taking a company on the stock market. You do an IPO, an initial public offering. And there's a lot of people who think, and I actually thought the same thing, that when you invest in an ICO, you're getting the best deal in the market, meaning that you're getting this huge discount because you're buying before it goes public. So when it goes public and the whole world like hears about it, your investment is gonna, you know, 100x. But truth be told, that these ICOs are actually not as big of an opportunity as people make it seem to be, because you're actually not getting that sweet of a deal as people behind the scenes got. Okay, so let me clarify real quick. Companies like, hey, we're gonna go ahead and do an initial coin offering. By the way, they said that about 90% to 95% of all these ICOs are unnecessary. And what that means is that the companies that are trying to make coins actually have no reason to make those coins. Okay, so there's no reason for them. So it's like just a way for them to raise funding, right? Because when a company goes public on the stock market, they're taking a chunk of their company and selling it to, you know, get people to invest in the company. They give shares away. But with ICOs, there is none of that. There's no dilution. So what that means is when they do the ICO, right, they put out a coin, people are buying the coins. They're not selling them a share of the company. So it's really, really cool. But at the same time, if you don't understand the point of it, you could easily be fooled. And I was actually being fooled for a little while because I started looking into it. But when I heard it from them, I was like, wow, that makes all the sense. These companies are putting out these coins that actually have no real utility for them. They have no reason to put out these coins. All they're trying to do is to raise money with the initial coin offerings. So when you're looking at these ICOs, especially if you're into these Telegram groups or these Facebook groups, like I'm starting to join, it's a great way to, you know, stay updated on the market and on the coins and stuff like that. But be careful, people trying to get you in on these ICOs and promising you the world, because as soon as these coins go public, your investment is gonna 100x. Because what they said is that people who get the super sweet deals are the ones that are really, really involved in the space, maybe even involved with the company, and they're getting the pre-ICO deals. Okay, so like whatever the regular ICO, you know, offering is, people behind the scenes are getting it for like 90% cheaper than what regular people or average like investors or people in the market are gonna get it at, like you and I, right? So that's that. All right, quick little recap before we end this off. One is make sure that you're making logical decisions, not emotional buys. So do your research, don't play yourself. Two, make sure you're breaking up your portfolio to the point where you're really evening out the risk, and make sure it's 40%. This is from Dan Fleischman. The first one is 40% into Bitcoin, 40% into Ethereum, and the rest of the 20% into any altcoin that you believe in that's going to serve a purpose in the near future. The last one is ICOs. So ICOs, just make sure that you don't fall for, you know, the hype of ICOs, because truth be told, they are not as profitable or as, you know, great of an opportunity as they might sound. Okay, so thank you guys so much for tuning in. Shebang Gang, love you guys so much. I know I haven't been posting too much, but there's a good reason for that. We're cooking up on a lot of things behind the scenes. By the way, make sure you guys grab your tickets to the Secure the Bag Summit. Probably by the time we put this up, the tickets are going to be sold out, but you click the link below. If it still lets you get a ticket, go ahead, you know, grab your seat, and we will see you in LA for the live summit. Peace. He ain't got no money. Watch out for my dogs. Wait, watch out.